Hello and welcome to TechBridge Innovations. In this video, we are going to learn how to make three-statement model, or in other words, how to make integrated financial statements. So three statements are basically the income statement, the balance sheet, and the cash flow statement. We have historical data of a firm in which we have 5-year data from 2019 to 2023, and this is a raw data like balance sheet and cash flow statement. So our first objective is to make a template, or if we already have a template, we will just put in these values in that template and then complete the three statements. Once we complete the three statements of the historical data or the given data, then we will look for some assumptions like the growth rates and other variables which are necessary to project the financial statement for the next 5 years. And then we will do the projections using those assumptions. So let's begin. First of all, we have a pre-made template here in which I will just fill out the values from the actual data of the firm. So first step is to put in the values. So there are two ways. First is you just copy the figures and paste them here, or the other way is you just link them. Like if I press equal sign here and go to the data sheet and press enter, so this will just take the value from there, and if I drag it to the right side, so it will take the revenue of the next uh, 4 years. Now cost of goods sold, so equal to, and then cost of goods sold there, and I will fill it to the right, or if you select it and press Ctrl R, it will fill to the right side. Now one important thing is cost of goods sold usually we subtract, means always we subtract from the revenue. So it should be negative. So I will just type a minus sign before that and then drag it to the right so that all the values are negative. Now gross profit is revenue minus cost of goods sold. So I will press equal to and then the revenue and then plus cost of goods sold. Why I am adding, the reason is because cost of goods sold is already negative. So if I add it, it will be subtracted automatically. So this is the gross profit of the firm for the next 5 years. Now we need salaries, rent, depreciation and interest. So equal to salaries, rent, depreciation and interest. All of these four are in one row, so I can just drag it down by command D or control D, and I drag it to the right by command R. Now I have to add them. So there is auto sum formula here. It will add all of these values, and now I will fill it to the right. So this is the total expenses. Now we need to subtract the total expenses. So I will write a minus sign before that so that we get negative numbers, and then I will fill it to the right. And now earning before tax is gross profit minus total expenses. So gross profit, it's here, and then I will subtract the expenses since it is already negative, so I will just add it. So these are my earning before tax. And now the taxes, the amount of taxes given in the financial statement. So I will go to the cell and press enter. So it will insert the amount of tax, and amount of tax is also a payment, so I should write in a negative, command R. And now the net earnings, net earning is earning before tax subtract tax, and since tax is already negative, so I will add it, and we got the net earnings. Now we need to complete the balance sheet. So cash balance, the closing balance of cash is given here. No, we have the opening balance, we don't have the closing balance. Interest, tax payable, debt, equity, changes in working capital, issuance, so we don't have the closing balance. So right now we cannot put in the closing balance. We will figure it out from the cash flow statement and put in here. So I will change the format of this cell, because this yellow cell means this is input cell, but in fact this is not input cell. We have to calculate this, so I will change the formatting of this cell. Okay, now account receivables, the receivables are given in the balance sheet. Receivables, they are here. Receivable and inventory both are together, so control D and control R. Now property, plant and equipment, do we have the value of property, plant and equipment? We have opening PPE, we have capital expenditure, and we have depreciation. We don't have the closing value. So we will also figure it out like here. Okay, and then liabilities. In accounts payable, we have been given the values of accounts payable. So equal to accounts payable, control right, and then the value of debt. We have the opening value of debt, and we have issuance repayment, and we don't have the closing value, so we cannot plug in the values of closing debt. And then the equity, we have the equity value 170,000, and it's constant, so that means no shares have been issued during the year. So equal to equity value. Okay, we do have the value of debt that's above equity. Yeah, so we have the opening value of debt as well as the closing value of debt, 50,000. So we will just put in there. Now fill it to the right. So total liabilities will be sum of these two. So we add them. Command right. Now retain earning. Do we have the balances of retain earning? Yeah, we do have. So equal to, and it was there, equity retain earning. Okay, shareholders equity, we just add these two numbers. Command right, and then total liabilities and shareholder equity is sum of these two numbers, like total liabilities and total equity, and we fill it to the right. And now the accounts payable, do we have the values of accounts payable? Yeah, that is 3902. So 3 statement equal to 3902, and we fill it to the right. No, it's already there. Okay, so accounts payable we have filled. Yeah, so the equity side is complete. Now we need the value of cash and property, plant and equipment. So yes, we don't have those values. We have just receivable, inventory, payable, opening balance, and that's it. All right, now we come to the cash flow statement. In the cash flow statement, I'm doing one thing. I will just freeze my pans here so that when I scroll up and down, I can see the title of the years. So freeze panes, and now you may see if I scroll down, the title will be there, and even if I scroll right, the name of account will still be there. Okay, so let's finish the values that we already know. In the cash flow statement, we need net earning. We have already calculated net earning here. It's here, and we will just fill it to the right. Okay, I mistakenly took the wrong value. These are the net values. 28227. Yeah, and now the depreciation and amortization, that is also in the income statement. It's there. And then we have changes in working capital, so we have to calculate changes in working capital later on. And then we have investment in property, plant and equipment. The investment values are given in the data, so that is investment in property 15,000, but since this is outflow, so we should write a minus sign before it. Command R. Then issuance of repayment, issuance or repayment of debt, and issuance or repayment of equity that is given in the balance sheet, means the data, it's there. Command D and Command R or Control R in Windows. So cash flow from financing, I will just add it. Command right. So let's recheck. Yeah, the values are wrong. I took issuance and repayment of debt is 0 and issuance of repayment of equity is not given, so that is 0. I mistakenly took interest expense here. And now since only one payment is there, cash flow from financing activities. Now net increase or decrease in cash, we will calculate it, and then opening balance of cash is given, so equal to, and then the opening balance of cash, it's here. Control R, and now we can complete it, but we don't have the change in this working capital. We will figure it out later on, and then we add them. And now cash flow from investing activity, that is also sum of the above values, and these are negatives. So net increase or decrease will be sum of these three flows, like from operating activities, investing activities, and financing activities. So here, and then closing value of cash will be increase or decrease plus the opening value, and that's it. So now the only thing remaining in cash flow statement is the changes in working capital. We will figure it out in the schedule below. Okay, now working schedules. So first of all, we need the value of account receivable, inventory, and accounts payable to find out the net working capital, so that we can put in increase or decrease in working capital in the cash flow statement. So receivable value, we will take it from the balance sheet. So I will scroll up. Receivable, it's there. Then inventory, that was right below that, so I will press Control D, and let's recheck. Yeah, 7805. Fill it to the right. Then the accounts payable, that was in the balance sheet, so I will scroll up to the balance sheet and figure it out from there. And it's here, 3902. Now fill it to the right, and then we have net working capital. So this will be just add assets and liabilities, and then subtract the, means add assets and subtract the liabilities. So this is the net working capital. Now changes in working capital, so this is just the current year net working capital minus previous year net working capital. So this is increase, and since we don't have any information, we can change, we can take this one. And now I scroll it to the right, so it will automatically subtract these two to find this, and then these two to find this, and then these two to find this. Alright, so now we have changes in working capital. We can fill those values in the cash flow statement. So equal to, and since we have to subtract it, so I will press minus sign there, and then I take changes in working capital. Now scroll it to the right, so we got changes in working capital, and we got our cash flow statement done. So now we have the closing value of cash. Closing value of cash is negative here, and which shouldn't be the case, but the reason behind this is we do not have the complete information. Like to make the cash flow statement for 2019, we must have the data of 2018. So in this scenario, what we can do is we the only missing information we have is the changes in working capital. So I will use a formula in Excel that is called goal seek. So I will set this cell, the closing value of cash, to the opening value of the next year. So that means 167971. So I know that this is going to be the closing value, and we need to change this missing value to find out what it should be. I press OK. So it will give me the suggestions that actually the changes in working capital for the last year was 160997. All right, so we got the closing value of cash here, and the in cash flow statement nothing is missing. We have the net earning, depreciation, changes in operation. Yeah, we have everything required to make the cash flow statement. Now since the cash flow statement is complete, we can bring that closing value of cash to the balance sheet. So in balance sheet I will press equal, and then take this closing value of cash, and now scroll it to the right, fill it to the right actually. Okay, so we have now, the only thing missing is the property, plant and equipment to complete the balance sheet. So we will complete the remaining schedule, PPE opening. So we have the depreciation schedule here. So the opening value of property, plant and equipment, we go to data and we get the opening value of PPE here. Scroll it to the right. Then we have the capital expenditure. CapEx means capital expenditures. So capital expenditure increases the value of assets, so we are adding it. And then the depreciation was given in the income statement, so we will take it from there, and it should be negative, so I will press minus before that and scroll it to the right. So if we add these three columns, these three values actually, so we will get the closing value. And why am I adding? Because the depreciation is already negative, so instead of subtraction I will add it, it will subtract it itself. So these are the closing values of property, plant and equipment. I will fill them in the balance sheet, equal to, and then the closing value of PPE. Now I fill it to the right, and now I add all assets, and as I add these, you can see I will get OK message here, and I have written the formula here, if error here, so that if there is error it will give me error. Now you can see the rest of the year's balance sheet is not balanced, that's why I'm getting an error. But as soon as I fill it to the right, everything will be balanced. So we made the balance sheet from the given data, we completed the income statement from the given data, and we made the cash flow statement. So this is how we integrate three statements: income statement, balance sheet and cash flow statement, so that all of them are interlinked with each other. And now if, let's suppose, next year in my company I change these values here, then everything here will automatically be updated. So in this first part of video, we have learned how to make integrated income statements, or how to make three statement. Now in the next part, we are going to complete the assumption section and the remaining schedules that will be required to project the financial statement. So see you in next video. Thank you.